We are a small, closed private equity fund with principals' money at work. We've grown over the last 7 years to become a leading player in the acquisition of recruitment assets and human capital assets, predominantly in the UK, but we also have some international coverage. So we established ourselves in around about 2005. We started to operate in the stressed M&A market to start with. We were looking at businesses that were in some form of distress, going into some sort of recovery position, and we would use our operational expertise to build those businesses back out again. So we'd invest our funds, we'd get in there, be quite operational with those boards to try and create some capital value. Markets hardened again towards 2007, 2008, and both James Khan and myself as principals and founders decided that with our background in both investing and recruitment, it would be wise to harbour in safe water. Traditional banks have a very different way of looking at the way that they would look to lend into a business, where asset-backed lending tended to have a much more practical way of looking at the risk of the money going in. Wasn't necessarily based on personality, but was based on balance sheet. They would look at the return, i.e. the cash generation on that, and it wasn't necessarily, is the plan a good plan or a bad plan? It's a case of, if it goes wrong, where do I get out? And asset-backed lending took a very practical view at putting in safe amounts of leverage into a business, or safe amounts of working capital or development capital, depending where you are in the transaction or the lifetime of a trading company, that was much easier to live with, much better priced, much more appropriately engaged with the board, and very reliable source of funding. We have always, particularly with ABN AMRO, understood where we stand. They make it very, very clear up front. It's understood by both parties that you build a relationship, you build in respect into that. Both parties understand what they need from that relationship. We need to understand how the bank protects its position. The bank needs to understand how our trading cycles work. And if there is parity and comfort through that, then neither party feels at risk, which basically harbours a really excellent trading environment. So I'm sure that we would not have carried on the acquisition growth that we have continued to enjoy and still continue to enjoy, and I think we've got a number of deals still on the table, if we didn't have such a strong relationship with such a practical banking partner. I don't see that I'll return to the more generic bank environment for lending for growth and acquisition within our portfolio. As banks feel more comfortable with the trading environment, the ability for asset-backed lending to have one or two small product attachments that allow them to move 5 degrees left and 5 degrees right of the asset lend, I think put them in pole position to completely outperform traditional lending going forward. So from my perspective, I'd be very surprised if you see me in a high street bank. I'd absolutely recommend ABN AMRO. We have had some fantastic trading results in certain areas. We've had certain situations where we've had to trade really through challenging times, where markets have moved or margins have moved or management teams have been replaced. Having ABN AMRO working with us has allowed us to work in unison. When we've had difficulty, they've worked with us, they've seen us through it. And then when we're enjoying good times and on the other side of the bank, then they're extending our lines as well and allowing the businesses to develop and grow.